Hey, have you ever felt like your pricing is leaving money on the table? Well, this episode is going to hit home. I'm sitting down with Dan Balcauski, one of the highest or brightest minds in B2B SaaS pricing and the founder of Product Tranquility. In this conversation, Dan is going to break down why pricing is rarely the math problem, but almost always the strategy problem. You'll hear how to monetize AI features without confusing your customers, and why the most important pricing decisions have absolutely nothing to do with numbers on the page. So, if you're a SaaS founder or product leader or just anybody responsible for pricing decisions, this podcast is worth a listen. So, join in on Profit with a Plan. Hey, entrepreneurs, are you working too hard for too little profit? Well, welcome to Profit with a Plan podcast, where we help you scale smarter, increase profitability, and build a business that's worth more, whether you keep it or sell it. I'm Marcia Riner, business growth strategist and the profit booster behind Infinite Profit. Whoop, as I get my little alarm going off, we help countless entrepreneurs turn their businesses into highly profitable and sale ready assets so they enjoy more income now and a bigger payday later. So join me for practical strategies, expert insights, and proven steps to make your business more profitable, more valuable, and built to last. Today's episode is sponsored by Infinite Profit, where we don't just talk profit, we deliver it. All right. So if you're tired of flat revenue and marketing that just doesn't seem to pay off, well, the new Profit Booster Growth Map might be for you. In just a few minutes, it shows you exactly how to bring in more qualified clients and plug those profit leaks that are seamlessly eating your cash. So go get your growth map right now at profitbooster.biz and start turning missed revenue into real money. All right, let's jump into today's episode. My guest today is Dan Balcauski, the founder of the Chief Pricing Officer at Product Tranquility. He is the go to expert for B2B and SaaS companies that want to get their pricing right. Dan works with high volume SaaS CEOs who are launching new products and need pricing and packaging strategies that actually support growth instead of slowing it down. He brings a rare mix of experience from both B2C and B2B markets across scrappy startups and large public companies. He gives that practical real world view of what makes pricing effective, what customers really value, and how companies can stop losing revenue to confusing offers and outdated pricing. Dan works Dan's work is about clarity, simplicity, and building pricing systems at scale. So if you've ever wondered whether pricing is helping you or holding you back, you're about to get the masterclass. All right, Dan, welcome to the show. Thanks for coming on.
Thank you for having me.
All right. This is an interesting topic. I know that most business owners don't really understand pricing. So I think we're going to get into this in the details, and I love it. But before we do this, how in the world did you find pricing as your secret weapon?
Oh man, well, I think it goes back to when I was 5 years old. I was really intrigued by the pricing of juice boxes at the grocery store. I'm kidding. No, I've
You were
yeah,
pricing that lemonade. It
uh,
wasn't 25 cents. It was going to be
exactly.
46 cents.
Exactly. I only knew about cost plus pricing at that point. I've evolved since. No, I've spent 20 years my career all in the software world, starting out as an engineer, moving into engineering management and product management, and learned really early on that most companies focus mostly about acquiring new customers, shipping features, and using that to acquire new customers, and spent very little time on how to capture that value that they were delivering. And that insight crystallized during my MBA internship for a very successful Silicon Valley startup where on the CEO's desk, they asked me to lead a freemium pricing project that the CEO happened to be looking at among a couple other projects that summer. And through my research, I uncovered that popular pricing model only works under very specific and surprisingly rare circumstances. And so, over time, I got asked to help out in different areas of other pricing and realized that this was a widespread issue. And today I have the privilege of helping, B2B SaaS CEOs transform pricing from confusing liability into a strategic advantage, whether it's helping them uncover millions in revenue through revenue leakage or helping them establish pricing processes that they could use going forward for their new product ventures.
Love it. Love it. Okay. So pricing is really a tactical situation that I feel. And I think that that's something that a lot of companies miss today, right? I mean, they just come out and go, okay, well, maybe they're smart in saying, well, here's our cost of goods sold, right? And here's our, fixed cost. Let's price it in with a margin of X. Or they just come out and go, oh, well, we can sell it for this. So there's that, that big gap, but they don't think about all the nuances in there. How do you bring that reality to the customer?
Well, I think you mentioned a couple of things in your question, which is, if you have a new product, you don't necessarily know what it's necessarily going to cost you to serve, or maybe if it's particularly innovative, there's not direct comparables that you could look at in the marketplace. So often, we talk about a lot of these companies today in the world of these new AI capabilities. They're like, hey, this thing can do something that your computer's never been able to do before for you. We don't know how much it's going to cost you to run this either. So there's a big question of maybe in some of those other traditional businesses, you're selling Coca-Cola. I know how much water and flavoring and sugar cost me as my fixed inputs, and I've been doing it for 100 years. Oftentimes, that's not really the situation that we're running into. And so, but as you mentioned, there's often just a lot of guessing or gut reaction of like we think we could charge X. And I think one of the misconceptions about pricing is, oh, it's all black box magic voodoo. Nobody knows what they're doing. And in the absence of that, there's an old cliche of like, if nobody has data, we're going with my opinion. And so
Right. And
there
your
is
opinion matters, right?
well, in the context of maybe the highest paid person in the room saying that, not my opinion specifically, but I think that there's definitely an art and science to this, and I think a lot of people think it's way more art than there is science. So it'll always be
Mm.
art because within this world we're dealing with humans and psychology and their perceptions of value. And so there are ways to measure that, but there will always be some amount of art to it. But in the last, I would say 50 years, there's been plenty of research to back that up with appropriate data-based methods to unwind that. So we can go a lot of different directions from there, but hopefully at least it gives a little bit of sense of my overview of where I play in this broad space.
Love it, love it. Okay, so you brought up a couple of points in here. Um, I think that I love the fact that it's the art versus science that comes into the pricing strategies that we want to employ. And with the craziness of technology that's all really coming out, there's so many different directions we can go, and
Hmm.
the always unknown that gets in the way. But thinking about this in a matter of, okay, I'm a young company. I've put together this thing, right? And I'm not new to the market, and I'm obviously not the only one selling this. Um, how do we how do we price that without racing to the bottom, I guess? Because there's always the cut cost, you got to be the lowest and so on. I know there's alternatives to that, but how do we price it so we're not racing to the bottom?
Yeah, early stage, I think this is probably not talked about that much. So there's a concept of price positioning. And I think
Mhm.
especially for early stage companies, this is maybe the most important strategic decision that applies to the pricing realm, which is where are we going to play? And so I might use, for example, the car market, right? Um, a Toyota Camry and a Lamborghini are both cars, but they occupy very different spaces in the minds of buyers. And in fact, like if you're going out and buying a car, my sense is that you're probably not comparing one against the other. You're probably in very different markets. And so, there is a core decision when starting a company or launching a product saying, who do we want to be? Who do we want to be for? You know, do we want to be I might switch between here and go, do I want to be Rolex or Timex? Both tell the same time, but I'm going to be competing in very different markets. My buyers are going to compete very different things, and we have something to drive value in one element or the other in how we're going to make our decision. And that's a choice. And so when you're, especially, as we were talking before, you're going into maybe an innovative space or a space where you don't have knowledge of your direct cost to serve, that's a place where you say, hey, are we going to be high price? Because that's going to be in that decision is going to invite the comparison of who are we being compared to.
Hmm.
And then it's about differentiation. So you talked about this race to the bottom. And so we need to understand what is our competitive differentiation. I think many folks, if you went to college or maybe in high school, you maybe took equivalent of an econ 101 class and there was these neat supply and demand graphs. And those are good, but you probably only learned about really two market structures, and they kind of glossed over this, or maybe you've forgotten. They always talk about the perfectly competitive market. I'm selling soybeans or orange juice or gold, which is a totally commodity undifferentiated market versus, oh, there's then the monopoly pricing market. I'm the only vendor in the space, and how those two differ. But there's a broad
And the
spectrum.
huge gap in
There's a
between,
huge
right?
gap in between, and the problem is that the vast majority of companies are in the middle of those. You, and especially in my B2B software world, you might describe them more as an oligopoly market. In an oligopoly market, there may be 3 to say 15 players in my space that do what I do, and all of them are going out with different messaging. They at a high level, if you look at their landing page hero, they kind of might blend together. But if you look at their products, who they're trying to serve, the features and capabilities, they have differentiation from each other. And so you want to be clear and be able to connect that differentiation, which is part of your core product positioning, then back into pricing and packaging. I'm a firm believer your positioning defines your product and packaging, and we should be able to our packaging should help us tell that story. So these are things like I want to be able to describe, if I have multiple offers on a pricing page, who these things are for, who these offers are for, and why they matter and why they're different from each other to make that choice easy for my customers. And if I create that choice architecture correctly, I then can change that conversation from, hey, do you want to buy from me or not, to which one of these do I want to buy, because we solve different problems and have organized as such. So it changes that frame. And so I think that is one of the key lessons for folks who are in this oligopoly market. They're not, pure monopolists, they're not pure commodity, but then they frame the conversation with the buyer such that, we often talk about good, better, best. About 70% of B2B SaaS pricing vendors have this choice architecture, but that frames the conversation of which one is the best one for you versus you trying to compare each feature on every plan to these 10 other competitors' plan. And that really helps a lot in avoiding that race to the bottom.
Love it. Okay, so to dissect that a little bit, it sounds like the pricing comes after you have A, figured out who your ideal audience is, and B, what offer you're going to make them or what product solution, piece that you're going to make them, and then you start thinking about pricing. Is that kind of the methodology you use when you're trying to price something?
Yeah, so I would say, this conversation would differ for companies at different stages of maturity. I
Sure.
would say early stage, that price positioning question you have to define, right? And just another great example, I think we were all familiar with, Southwest Airlines, the only airline that's been profitable through the course of its history. Every other one has gone bankrupt probably multiple times in my lifetime. But their price positioning was, hey, they started in Texas and they said, hey, we know business travelers are having to go from Houston to Lubbock. Right now they're taking their cars or a bus. Can we make it cost competitive with their own person, taking the time to drive, right? And so they made that decision early that that was the differentiation they were going to compare on. But then I think the second step beyond price positioning you mentioned is you need to go out and sell something. And most early stage companies are in value discovery mode for a while. So, what does that mean? They have a hypothesis of like, hey, this is a problem that needs to get solved, and we think we have a solution to solve it. And they need to go out and see if people buy that approach. So the price there is always, through any stage of company maturity, pricing is always part of the conversation, but it's not generally what's going to kill you at those earliest stages because it doesn't matter what your price is if you don't actually solve a problem, if people don't see value in the solution, then or you can't reach or talk to those customers, it doesn't matter what your pricing and packaging is. So very early stage, it tends to be, are we actually solving a problem people care about? At that stage, you want to generally, I would say, keep things simple, right? Don't overcomplicate it, but also charge something because as you go out and do that value discovery, you want to, if we think about the human brain, we might say that value is the pleasure and the price is the pain. And in order to get really
Okay.
valid market feedback, we want to have both, right?
Right.
So I think it's generally a mistake for folks to go out and say, well, we're still early, so we're getting users, not customers. We're just giving everybody the product, right? You're not
Uh,
really getting a good market signal in that case. And
And I
again,
think
this,
that's important to have that market feedback that tells you, hey, I always thought, well, pricing to get awareness, right? Start to get activity, start to get users, right? But then slowly increase that price to a point where you see people are still willing to pay for it, but what's that price that they stop willing to pay for it, right? That it's no longer valuable in it. And I think you keep using the word value, which I want to go into next. But I mean, am I on that point that you're thinking, well, where do we price it based on, so we can get that market feedback?
yeah, so you generally have an idea, at least early stage, because you mentioned, different customers or ICP. You usually have I would say, ICP hypothesis, much like you'd have a positioning hypothesis. And so you want to create something such that you can go out and get validation on that hypothesis, but just understanding you're probably going to be wrong and there's going to be some iteration, right?
Sure.
And changing the price point can be part of that iteration. But what I'd also encourage folks to do is something like having, if we think about, there's multiple elements of packaging, but one of them is your bundles or offer configurations. I
The
alluded to it
values.
before in sort of good, better, best, is going out with a couple of offers out of the gate such that you have the thing where you're like, look, this is the no-brainer basic offer. I don't expect to get any resistance. But then I also have the higher priced one that is stretching my comfort level a little bit in even saying it out loud sometimes. And, often I think there's a anchoring bias that companies have. We often talk about anchoring with consumers, but companies often have an anchor to like, oh, I don't want to ask for this thing. But that'll structure when you're going out and doing that testing, instead of just moving one single price point, allows you to say, okay, I've got this thing I think is a no-brainer. It'll get me some validation because I'll be able to get customers. And I've got this thing that's maybe a little bit outside of the range of my comfort. And now I have multiple dimensions I can play with to get that price visibility because you may be surprised how many folks just don't even blink and sign on the dotted line. There's the ultimate, there's a well-known theory in economics called the winner's curse, right? Which you're like, if I give someone an offer, I say, hey, this is going to be $1 million, and they go, great, give me a contract, let me sign it right away. You're like, oh no, did I just
I
give
should have
away the
charged
farm?
two.
I should have charged two. I should have charged 10. They signed so quickly, right? So that allows you to stretch that and get that feedback in a little bit more structured way. Does that help?
And I like this. This sounds like a theme for you to have a good, better, best, or a low offer, a medium offer, and a high offer because you want to give your buyer choices, right? They don't want to know that this is the only one because if there's that theory that, oh, don't confuse them because a confused buyer doesn't buy, but you're not confusing them, you're giving them choices of here's package A that includes this, or package A is the bare minimum do it yourself kind of model. Package B has got some support and more bells and whistles, and package C happens to have everything in the kitchen sink in it. And I think that's where you're testing with the buyer what they want to do, right? One comes with, it's all done for you, or so on. And I think that's really important, and having those opportunities for the buyer in your pricing structure, because like you said, they could all be buying the done for you stuff or the big package C without you realizing, and you were thinking, oh, package A was the one that's going to get them in the door.
Yeah, exactly. So you're giving them a choice, which frames the conversation from will I buy to which one will I buy, which is a
It's already
powerful
taken that
framing.
assumption out, right? That you already
Uh,
know they're gonna buy, or you think they're gonna buy. So now which one, A, B, or C?
and it also gives you a chance to frame the value versus just working with a, hey, this is a thing, this is what it costs. Now you can say, oh, this is more expensive, but here, let me tell you why it's more expensive. This is all the things that you get. And so it allows you to also validate that value in the same conversation. Also, we were talking before about ICP hypothesis. So
Yes.
when we think about a well constructed set of bundles or offer configurations, fundamentally, we should be thinking about building those for a particular customer segment. So
Know your customer.
in that conversation, we say, well, a lot of our customers who are like X by Y, and this is why they get validated. But other customers really like this because it has these capabilities, right? And even we went through a simplifying assumption before of the Camry versus the Lamborghini. But even if I say, well, I want the Camry, right? There's the base trim, and then there's the sport package, and then there's the four-wheel drive, and there's the electric motor version, right? So there's different choices within that. It could be almost overwhelming. I'm actually in the car market right now, and it's
Oh
like
no.
I'm waiting for an AI assistant to make the shopping prices better because let's just say I probably a shared experience going on the car lot naive is the last thing anybody wants to do.
Ay.
I apologize to all
What
my
can I do, Dan, to get
well-intentioned.
you into this blue car today, right?
Exactly. Do you need that undercoat? You got to have that undercoat.
Yeah. And then, funny enough, let's stay on this point for just a second. This is probably one of the worst experiences buyers have, right? So it's kind of that dentist fear, going onto the car lot. I've made my decision. I want this blue car with this trim, and the price is X, and I'm comfortable with that. Then it goes back into that back office where they start asking, you want this, you want that, here's the, all these things that end up pushing you back. How does that play into your pricing program, where like companies like CarMax says flat price, that's what it is, whatever. And then you get those negotiators that try and jack up all those silly things on the back end.
Well, I think you brought up a really great point there with CarMax because what they saw, this goes back to the point about price positioning. What they saw was there is a value differentiator. There are people in the market
That
who
don't want
are
to haggle.
okay, want to pay a fair price, but don't want to deal with the BS of going on the car lot and feeling
Yeah.
like I'm in an adversary, like I'm being interrogated and
Yes.
I'm high pressure sales. Um, and but all I guess the other kind of corollary is there has been a significant backlash in recent even the recent year about add-on fees, right? We were making this joke about, okay, you think you're done with the sale and then you get to the financing office, they try to sell you all these other warranties and undercoating and everything
Exactly.
else, and we've
And it
seen that
takes
as
you 4
well.
hours to get out of that, right?
Yeah. And we've seen that as well with even in maybe more relatable example, Airbnb just went through this. Brian Chesky, CEO, founder of Airbnb, basically went out on Twitter and said, "Hey, like we screwed up. We realized that when you saw that a vacation rental for $100 a night, and then you got to our checkout page, and there was a $900 cleaning fee and a $500 safety
Security
fee and
charge.
like what a security charge. That is a really negative buying experience, and so we have to be aware of that because this is also where the art and science comes in. Like, and we've all dealt with this. Even my beloved Southwest has just gone and said we're getting away with the bags
We're
fly free.
charging you for
Possibly
seats now.
we're charging you for seats. We're gonna charge you for bags. I wish them well. I think it's a strategic mistake. They have their reasons, but we do have to be sensitive to this. And I think this is an area where, um, we may talk about, price points, right, or these different sort of designs, but I think nothing in this process I could emphasize more than you need to talk to your customers. And I think this is where folks have this idea of like you cannot talk to customers or prospects about price. There's a way to do it. You do not want to do it in a negotiation setting in a, hey, we're
Sure.
trying to get you to buy this thing, but you can set up customer interviews or prospect interviews where you talk about the value of your product. You ask them, understand the problems they're trying to solve, especially folks that have recently been in that market. What were their decision making criteria? And then once you've described your product, you can have conversations about like, okay, if we presented it like A or B, which would you prefer? And for the purposes of example, I'll just allude all the details and just say, economically for the year, it would cost you the same thing, but they're presented in different ways. The pure rational homo economicus, this godlike being that doesn't exist, would say, hey, there's no difference in the price paid between those two. They should be completely indifferent between those choices, and you will get very different reactions from the humans that you talk to, because they will say, well, look, like if you price it like this, I understand what you're trying to do, but that creates a bunch of uncertainty because this implies some blah blah blah. And you want to listen for that because that's probably what's going to be going through the mind of your prospects, but they're not going to tell you about that during a sale. And so you can have very upfront conversations with them to say, hey, how does this land with you? Right. And there's better and worse ways to sort of ask those questions. We can get into if you want. I've covered them in detail in other places, but you absolutely can talk to your customers. And look, I think this is one misconception I would love to clear up generally across all industries, but you don't have a choice of if you're going to talk to your customers about price. You only have a choice about when.
Correct.
So do it
Correct.
as early in your process as possible, meaning like, hey, we're thinking of building this product. This is how we're thinking. This is what we're thinking of building. Is that valuable? Here's how we're thinking of pricing it. Like, would you be a buyer? Why not? Because your alternative is to wait till you've spent hundreds of thousands or millions of dollars of investment to build this thing, and now you have a poor salesperson on the call who first time ever has to talk about pricing that's never been validated or spoken about with the customer before. So which situation do you want to be in? And obviously that's two ends of a spectrum, but I feel folks are like,
Yeah.
well, we can't talk to people about price. But it's like, well, you will. You like, if you ever want to sell it, you will talk to them about price.
Yeah.
And
So I know that surveys are difficult, and getting that honest feedback from your customer or your ideal customer is sometimes challenging, or in many cases previously expensive to go through the survey company and have this and do all that kind of stuff. How do you feel about, to put it kind of in a real basic kind of analogy, A/B testing, right? You do, here's, a certain segment of the population gets this pricing, and a certain segment of the population may get a different model of pricing that does that. I mean, is that like taboo in the pricing structure?
it is it works in B2C scenarios. In B2B,
Okay.
it breaks down quickly.
Ah, got it, got it,
And
got it.
and what and there's a bunch of reasons why, but one reason is anytime you get sales involved, then so say you have public pricing and packaging, and different people going to the website see different versions. The salesperson gets on the phone; they don't really know what the customer
Got it.
saw.
Fair
So
enough.
and a lot of this is about trust, right?
Mhm.
So if I'm changing pricing and packaging, and let's say, right, I mean those systems that show you version A one day and maybe they drop you a cookie. So you're supposed to always see that version, but then you log in from your phone, you see, when you're at home, you see another version.
Got it,
All of a
got it.
sudden you may be like, wait, they're trying to pull one on me. I'm confused. Now I'm distrustful. Now I move on to the next vendor. Also, also sales cycles because in a B2B usually most consumer purchases are not long
Lengthy.
considerations. Yeah, not lengthy, but average B2B sales cycle might be 30 days, 60 days, 90 days, even more. And so then you run the risk of them intercepting a test, or you're in a long sales cycle with your champion and they're about to bring a proposal to their boss and their boss does the swivel check. Well, let me pull up their pricing. Wait, this is different from what you're showing me. Now your
Fair
team
enough.
has invested all this money and time into. So there's
Fair enough.
several other reasons, but those are generally why it tends to not work in B2B.
Okay, so we'll stick with the responsible thing to do, which is talk to humans, right? That are our customers or, soon to be customers or so on that might want to have that conversation. Um, So let's talk let's go a different path here because you've given us a lot of insights and I want to kind of address there's an elephant in the room, especially as we head towards the end of the year and Black Friday and sales and sales and sales and discounts and coupons and discounts. From my understanding, I don't think business owners realize how damaging that is when you have that discounted sale. How does that play into pricing strategies that you're talking with your customers about?
It varies. If folks remember, um, there was a change of CEO at the retailer J.C. Penney back in like 2012. They brought over a guy, I think his name was Ron Johnson, he was running all of Apple retail. And J.C. Penney was very much known as this, we run promotional discounts, etc. And he said, we didn't need this at Apple. We had a very consistent, you get one price, there's no discounts at any of our products. So I'm removing this at JCPenney and their revenue plummeted. And so the economists might look at that and say, well, that's odd. But I was actually rereading, there's a Nobel laureate at University of Chicago wrote a great book, Richard Thaler, called Misbehaving. And so he talks about this distinction between um, uh, uh, there's basically a transactional utility. So folks have either a positive, either I went to the used car lot and I got screwed, or I got this great bargain this weekend, right? And so that is a part of the utility we get from a purchase that is not usually found in the sort of rational, calculations. I say all that to say promotions can be useful if applied in the right context, if applied consistently with how your buyers like to buy. The JC Penney buyers got a lot of transactional utilities for, oh my God, this sweater is usually $50 and I got it for 35. Like, that says something about me and my shopping skills. And so
They wear it like a champion, right?
exactly. In most B2B contexts, that rarely pans out. And there's been some good studies trying to look overall at industries. Do seasonal promotions actually have net positive benefits? And the data is way murkier than you would expect.
I can imagine it's
So,
murkier.
so I would say, in general, those things just tend to pull demand you would have got anyway forward. So you see this, a little bit of bump, and then in the next period you see a lag after the promotion goes away. So I would say tread carefully, unless maybe you're J.C. Penney or in those type of retailer
Thank
environments.
you, because I address that problem with a lot of my clients. I had one client that was selling a solid product and was constantly trying to boost sales through discounts and coupons. And his margin was really high, so he thought he had enough room with it. And I said, but you're training your buyers to stock up during promotional time, and then they don't buy during retail times, and then you've got this peak and valley that's going on constantly and not a steady flow of manageable or dependable income that's coming through. And that's where I think those sale prices, besides really, you're not given a 10% off. You're actually end up, when you look at the numbers, it's more like a 15 or 17% deduction when you look at all the abilities of what it does to your margins. But that's a whole nother conversation. I just think that they don't realize that that sale mentality, you're training your buyers to look
Yeah,
for sales.
and we have this in B2B as well. Sales folks usually have some amount of discounting, and
Sure.
anyone who's ever bought any software or anything B2B, you know that calling the business at 11 p.m. on December 31st is going to be your best deal of the year.
Yes.
But there's a company out there, I think it's Chili Piper. They had a pretty good blog where they don't do any discounting. And one of the things was like, well, we could, with the major idea is that in B2B sales, if we're trying to close deals end a quarter, right, we start extending discounts and that motivates people to buy. But what they've actually seen is the same buyer behavior even without discounts. So what we
Ah,
think may be happening, and again, I would wait to get more rigorous studies, but I think we've trained B2B buyers to buy software or hardware or whatever at the end of the quarter, and there's a inverse implication that discounts are driving that versus, yeah, we use discounts, but now we've just created this behavior, so it's actually not impacting it anymore. So you might just be giving too much away, but attributing the reason people bought was because you extended them that last minute discount. So it's an
yeah.
interesting world, and I again say tread carefully because, as you pointed out, it could have significant impacts on your margins.
Well, Dan, you've given us a lot of thought. I mean, pricing is not an easy topic, and it's got so many variances. And depending on, what you offer, whether it's a physical product, a SaaS or a service, or it's a physical service provided by a person. I mean, there's so many different variations in how you think on pricing, but it is really important to sit down and review and think of your pricing on a regular basis, and consult with somebody who understands the marketplace and the economy and the needs of it, as well as interviewing your human customers, right, to get that information. So knowing that this is a big gigantic project that's probably not just done randomly and guessing, hey, they sell it for this, so we're going to sell it for $5 less. It just seems like there's so much more for it. So, with that in mind, how do listeners find out how they can price better, not leave money on the table, and make sure that they're meeting the needs of their customers without leaving money on the table? Where can they find you?
Well, well, I think they've made a good first step in listening to this conversation so far. If they want to learn more, I blog regularly on my website, producttranquility.com, and I've recently launched a CEO pricing scorecard that
Oh,
folks can use to. It's a simple, I think, 12 question assessment with some prescription of different pricing areas, right? Of around things like your discounting policy or your different offers that you've launched. Very simple to answer, and then the takeaway has prescriptions for starting to address those for each area that maybe you didn't answer in the affirmative to. So folks can find that if they just go to producttranquility.com. Also happy to connect with folks on LinkedIn at Dan Balcauski. Pretty easy to reach there.
great. You ought to call it Dr. Dan, right? Since you're giving prescriptions. Love it. Yeah, super valuable. And I think there's so many nuances with it to kind of have a clarity on where you are and at this time of the year, looking at shifting, making sure that, with the economy ups and downs, or with your competitors up and downs, or with your buyers' needs and likes and wishes, really ought to have a time to reflect on how you're pricing and if you need to possibly adjust. I would definitely say take you up on that CEO scorecard. That would be a great starting point. All right. Well, thanks for tuning in today. I hope you picked up some valuable insights and actionable ideas that will help you make your business more profitable. And I know that Dan's idea and the CEO checklist and scorecard is super important for you to figure out on that pricing. All right, but before we go, if you're thinking that you might want to bring in more clients and keep more of what you earn, I suggest you go check out the Profit Booster Growth Map. It pinpoints your top 3 moves to grow revenue this year and stop those profit leaks quick. So go get yours at profitbooster.biz. And don't forget to subscribe to future shows. You can always find Profit with a Plan on your favorite podcast platforms. And we're looking forward to more great, profitable information on next week's show. So until then, make your plans and profit with them. Thanks so much, Dan.